Good day, ladies and gentlemen. In this particular video, I'm going to be teaching you a smart money strategy which is known as supply and demand. Okay, so the basic idea behind the supply and demand trading strategy is simply for you to wait for smart money. Okay, you wait for smart money to show you the cards they are playing. Okay, so basically it's more or less like looking out for hints on the charts to see where smart money actually entered the market. Okay, when I talk about smart money, I'm simply talking about the big banks. Okay, I'm talking about the banks. I'm talking about other financial institutions that actually play a role in these financial markets. Okay, so how are you going to find out where they actually enter a trade? Very simple. Basically, when it comes to supply and demand, we have four types. Okay, so there are four patterns to it. The first one is rally base drop, like this. So you're gonna see price rally in the opposite direction. Then you have a few candles forming the base, and then price is gonna drop like this. So this is a supply zone. That base is going to be a supply zone, like rally base drop. So this base region is going to be a supply zone. So the idea is you wait for price to get back to that zone, then you take a trade in the downwards direction. Because when smart money make these big moves, most times those levels, when price returns to that level, a lot of traders will be there to actually take trade in the same direction. Okay, so that's just the idea behind supply and demand. So for you to actually find out which level the smart money are actually entering their trades, you will always see a big move from that level. Okay, so it's either you have a rally base drop, which is the first type of supply zone, or you have a drop base drop, this for supply zone. So this base is where you'll be looking to take your trade. Okay, so rally base drop, drop base drop, those are the two types of supply zones you have. And then when it comes to demand, you have rally base rally. Okay, so a demand zone is simply a zone where you buy from, while supply is a zone where you sell from. So the zone is always the base. Okay, so the base is always your zone. So this is a rally base rally demand zone. So you're simply waiting for price to return to that base, then you take your buy trade. So this is the first type of demand zone you have. The other type of demand zone is drop base rally. So price drops, gives you a small base, and then rallies in the opposite direction. So when you see that big rally in the opposite direction, that tells you that smart money entered at this base. Okay, so all you just need to do is wait for price to return to the base, which is now your demand zone. Then you take a trade from that level. Okay, so basically that's just how supply and demand works. Okay, so I have a few examples that I'm gonna show you on the charts. Okay, so this is 13th um this is 13th of December. This video is being recorded on 14th of December, which is today. Okay, so this is current price action. So I like giving you examples from price action that is current. So look at this. What do you see playing out here? This is a very nice demand zone. So we had price dropping. Okay, so price dropped, gave you this base right here, and then rallied in the upwards direction. Okay, so all you simply need to do is to form a boundary around this base and wait for price to return to that level. Okay, so you can see what played out. Price returned to that level where you had that base and then pushed in the upwards direction. Okay, so that's just how to use supply and demand. So this is a very strong demand zone. So look at this. This is more like a rally base rally. Rally gave you this base. I took this particular trade yesterday, rally base and then rally. Okay, so this one, the reason why I took this one and I did not take the other one, I'm going to explain it to you. So this is the base right here. So when price returns to the base, it pushes in the upwards direction, breaking the structure up here. So I took my profit around here. Now, the reason why I did not take this one is I don't like it when so many candles are forming the base. Okay, I'll prefer when it's just a few candles. that form the base. You can see this is just about 3 to 4 candles in between, okay, that form the base. So I like this type of base. So I don't like a situation where you have so many candles. I'm not saying when you have so many candles it's not going to work. It's still going to work. It could work, but the probability of it working is a little bit lower compared to if price does not take much time during the accumulation phase. So because this is like an accumulation, then price pushed upwards, okay. So I prefer this type of zone, okay. So let me show you one more. Look at this. This is also like a rally, price push in the opposite direction, which is a rally, forming the base and pushing the opposite direction again. So this region where you have this base is your demand zone. So you simply wait for price to return here, then you buy, within this zone. You buy at this point. The stop loss goes beyond the zone. The take profits, you can take it at the opposing liquidity, which is whatever high that has been created, okay, before price returned to your level. But like I said, this type of trade I won't take it because it has so many candles. I prefer my base to be, not this wide. I don't like a very, very wide base. Okay, let me give you the underground secrets behind me not liking a very wide base like this. The reason why I don't like this kind of base, okay, the reason I don't like trading supply and demand with this kind of base is that for you to have so many candles here, you are already engineering liquidity. Like liquidity is gonna be resting below this because there are so many candles here, okay. So it implies that there will be liquidity below this level, you understand. So when price is accumulating, it's also engineering liquidity. So I don't want it to accumulate for too long, because if it's accumulating for too long, it means the liquidity below it will be more, which can be targeted, for manipulation sake. Price could go beyond the zone, targets below this accumulation to take the liquidity resting below it, and then push in the upwards direction. So your stop loss would have been triggered before price goes in the direction. So I prefer an accumulation that is not as much as this. Okay, that does not mean it's not going to work. It's going to work, but sometimes it won't work. Alright, so I prefer a situation whereby the stuff is not the base is not that lengthy. So you can see this one played out just fine. Price tapped into the zone and pushed in the opposite direction, breaking this high right here, which would have given you a wonderful buy trade. This is current price action, so this is where price is currently. Okay, so if you got any value from this video, subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.